so while most cryptocurrencies that kind of rode up during the NFT craze have cratered in the minting on their chain, Tezos has actually thrived, and it has more usage of the network than 2021, which is incredible.
Where's the demand coming from?
Mostly the art world. So basically, crypto, one of the main criticisms of it is that it's a solution in search of a problem. For digital artists, it actually does solve a problem. And what you see is like in more organic communities, people sort of rallying together and minting their art on the blockchain, and then they're able to trade it, so on and so forth. But that's been one of the few sources of organic growth in the industry writ large, and in particular on Tezos.
It's an interesting conversation because it takes us away from just trading crypto, making money, losing money. It's about a use case here for crypto. So just flesh out how your crypto is different to the likes of a Bitcoin and Ethereum.
Yeah, so Tezos is a smart contract platform. So at first blush, it looks very similar to Ethereum. One main difference, though, is that Tezos allows for token holders to vote on and ratify upgrades to the protocol, which are then instantiated in a decentralized fashion. Meaning, like, basically, someone can propose a new bit of code, and then a supermajority of people who own the token have to come together, say, like, yes, we want this, in order for it to take hold. This sounds like kind of clunky, but it's actually happened 11 times, whereas Ethereum made a big splash and made a big marketing campaign out of doing it once. We do that every few months. It has like almost no fanfare because it's just so programmatic.
So there are use cases where this is potentially viable for a lot of financial contracts. You mentioned NFTs before.
Yeah.
The energy efficient side is quite key. Just talk us through how this is quite special to what you have in the marketplace.
Yeah, so I mean, a lot of what makes headlines in cryptocurrency land is problems. You have a hack. You have some sort of, awful design of something, and that's really what gets headlines. Tezos almost anticlimactic because it anticipates those problems. So, for example, even though usage of the network went up tenfold in 2021, the amount of gas consumed actually went down, meaning the fees that you pay to basically to compute on the network went down. And that's because there were upgrades that basically anticipated increased usage. And we're like, okay, well, we'll make XYZ more efficient so that fewer gas fees are rendered. So it's like almost, we anticipate the problems and then it's solved before it's even an issue.
Can you comment on the crypto winter? I mean, it keeps on going on, and we're not seeing any bounce off some of the price lows. What's the impact, and where do you see it going?
Oh, I think it's only going to get worse. A lot of this was inflated on cheap money, and a lot of this was backed by basically VCs trying to pump, everyone's trying to find yield, right? But there was a lot of easy money going into the system, and I think it was artificially stoking a number of different things, namely valuations of these companies. You saw, I think OpenSea had $300 million in sales in September 2021, $9 million in sales in September 2022. So, clearly there was a phenomenon that has kind of crested and gone away in a lot of these markets, but, meanwhile, they're saddled with a $13 billion valuation. So I think there was a lot of cheap money that went in. Valuations went super sky high. You had people scrambling to make those valuations justified in some form, usually through cheap tactics like yield farming. And now that the easy money's gone away, all that's left is organic communities, I hope. And yeah, that's been the arc.
There's been a lot of cover though for the industry. The excuse that, tech's created as well, so you've seen volatility there. So there's no surprise you'd see it in cryptocurrencies. That's risk off for investors. But once we get a Fed pause potentially, some are saying that you could see a rally in crypto along with other risk on assets. But what if that doesn't materialize?
Well, I think the smart person way of talking about it that I've seen, that I've been convinced by, is basically tech, obviously in a low interest rate environment, what you're pricing it is not who's actually using the tech, but it's sort of anticipatory benefits, right? And then that kind of cratered. Meta's down 70%. I just saw on your screen, and it's coming down to actual user growth. And I think crypto hasn't been evaluated by that metric, and neither has technology in the last 10 years that we've had low interest rates. So it remains to be seen, but basically I think what you'll find is the things that are useful are going to thrive, but that's the small minority of crypto applications, whether people want to admit it or not.
A lot of business models have been built on the high volume of transactions in crypto that we've seen to date.
Yeah.
But clearly that's flipped lower. The transactions are down because we've seen less compelling evidence that the price is going to go up. So how does that impact the growth of the sector when you've seen such volume-based activity?
Yeah, I mean, I don't think, I think a lot of that stuff was basically predicated on extremely cheap tactics for getting people in the door in the first place. So, I mean, what easy come, easy go, right? So, I don't know. I mean, I think cryptocurrencies solve a really intractable problem that we've been trying to solve for hundreds of years, which is how to exchange value with someone who's very far away without the use of or risk of an intermediary. Whether or not that is sort of the panoply of things that has been proposed to do, like, you know, cure cancer and like get rid of, you know, plastic in the ocean, is completely bizarre. And it's been really like super easy for people to market themselves on this for the last like 5 years or so. I think you're just going to find a bit of revisionism and a bit of new history coming out of this.
Can we talk about the competition? Because we've seen the winner-takes-all approach in various different sectors, or e-mobility, social media, search. I gather you have a view that it may be that type of scenario too when it comes to your industry. But what about some of the other traditional players, the banks? They all have very large teams now working on crypto. Exchanges have a lot of crypto experts as well. Do you get upended, disrupted by some of the traditional players?
Oh, it's absolutely possible. There's a ton of really smart people, you know, working on this industry, and you know, even the adjacent spaces. It's hyper competitive. I think there's the spirit of this, the origin story of cryptocurrencies is a bit more cheeky than like what's going to come out of a bank. And so you saw, like, I mean, at some point Meta had a budget of around $2 billion for their cryptocurrency initiative, which they don't talk about anymore, obviously. But, you know, $2 billion is a pretty big war chest by any account. But, like, what problem are you actually solving? I think you have to be a little bit irreverent in order to make an impact in this space. And that's, irreverence is not going to come out of a bank. And that's okay.
What's the role of crypto in the super app world? Everybody's talking about super apps, from Elon Musk to Google and beyond. So what's the role of crypto here?
Yeah, so I mean, like, so a lot of people have justified like the lack of traction in cryptocurrencies by saying, oh, well, we haven't found the killer app yet. And so what's been revised is like, oh, Web3, that's it. Web3 doesn't actually mean anything yet. It's mostly a knee-jerk reaction to the ad-based model of the web, so-called Web 2. And you think of big players like Meta, you think of big players like Google, and those guys have had bad PR over the last like 5 or 6 years, so it's been easy to wallop on them and blame them for like the downfall of democracy or whatever people want to, castigate them for. But I think the fact of the matter is, we don't exactly know what a sort of decentralized version of anything looks like, because the bias has been towards a centralized model. And even if you look at, there was a crypto exchange, a so-called decentralized exchange that went down a few months ago because there was an AWS server in Virginia that went down. And so I'm like, well, that's not really decentralized, is it then? If it's all predicated on AWS anyhow.
So the big spending programs from Meta by Mark Zuckerberg, is that just a stab in the dark?
I don't know. I mean, I feel it's weird because I think Meta is by and large an extraordinarily well-run company. Like, very few companies do major acquisitions well, and Instagram obviously folding into Meta was fabulous. They have 3 billion users, a month. Like, that's crazy. That's a wild proportion of the world. You don't get that by being bad at shipping and bad at engineering. I wonder the extent to which, Sheryl Sandberg obviously left earlier this year, and I always kind of thought that she was the adult in the room when I looked at sort of the corporate governance model of Meta. So I don't know if this is just a Mark Zuckerberg skunkworks project, but it is kind of appalling to see the amount of money that's been spent on the so-called Metaverse. That company.
Just finally, can I ask you about hubs for crypto? Because you have a great lay of the land with your business. Where is the natural hub as the likes of Singapore, London, now Hong Kong,
right.
Dubai, of course, all go after being number one in this space?
Yeah, there's definitely, there's talent everywhere. Like, talent is equally distributed, opportunity isn't. I think there are hubs where governments have been much more, much more deliberate about courting talent. So Dubai is making, tons of effort to doing that, and I think they're doing it in a smart way. Singapore obviously has a system for that. Like, they court industries very systematically, and my sense is that they're trying to be more open to crypto than they were in the past. But I think, if you're just looking at like raw engineering talent and things like this, it's hard to beat Silicon Valley, and that's got a massive foothold. It's got obviously a fantastic educational system that pumps into great engineering culture. And then London, where I'm based, like I also think is absolutely fabulous. And for the longest time, it's been sort of a magnet for talent from all across the EU. I hope with Brexit and all of the different, constraints around that, they continue to find a way to do that. They're making efforts by obviously giving sort of safe haven status to graduates of top schools and things like this, and that'll move the needle a little bit. But like I think, museums curate, countries shouldn't.
Yes. So the talent is more important than regulation then.
Yeah, I mean, I think regulation it's always been like this very amorphous. There's no clear guidance, and unfortunately, like people see this as basically a political discussion more than anything else. And until there's like clear legislation, I think it's just going to be something that politicians speak about. But the new PM of the UK has paid a lot of lip service to crypto as an industry. So I hope that comes to the fore. But there's sensible policies, and then there's sensible policies.